Good morning, traders. This is an update on my swing trade with SPXL. If you're not familiar, SPXL is a 3 times leveraged ETF. It tracks the S&P 500. If the S&P 500 goes up 1%, SPXL goes up 3. Likewise, if S&P goes down 1%, the SPXL goes down 3%. So this trade has been going on now since about July 20th. This is when I got in. This is my third trade in a row on SPXL using Webull, so I was in for these last two runs as well. And then price came down, stopped me out on this day, and then I get in for the break of a daily candle on the following day. And then I base my position size off of the risk given by the range of this candle, because the worst case scenario is that I could get stopped out on the first day. So I get triggered to get in on this day. And of course, anything can happen. The price could reverse and stop me out on the first day. So that's how I base my position size. And in this case, it only equated to 3 shares, but that's what it was based on previous wins. I don't want to give back, say, like my last 2 trades on the first trade if it stops me out on that first day. So that's where we were on July 20th. We actually, by accident, I bought in 4 shares and I day traded that day and ended up making, a few dollars in profit off of that extra share, just to get it back down to the 3 share size that I should have had from the beginning. But I'm not counting that as a profit on my swing trades, because that wasn't, and I'm not even counting that as a day trade. That was just kind of like some weird fluke thing that happened. Now, what ended up happening was the next few weeks, the price continued higher. I followed my stop loss up with the 50 MA, and then the price looked like it was going to come back down and stop us out on the 50 MA, but it didn't. It got very close and reversed, and this is a very bullish sign. So I decided to add a single share at the break of that candle. So that moved my position. So this was my original position, 105.26 with the 3 shares. Then I added 1 more share, which doesn't sound like a lot, but that's a 33% position size increase when you only have 3 shares to begin with. So that moved my position size up quite a lot, 107.90. And this was really an attempt just to add to a winner, which is a good habit to get into, especially if you're going to be a long-term swing trader. You want to learn how to add to winning trades and maximize your profit in the long run, because an ETF like the S&P 500 ETFs, they can continue for quite a while and give you some opportunities to add. So this was one of those opportunities. And then what happened, the price continued higher and it came down and looked like it was going to stop us out on this day and did a reversal. So I decided that this was essentially the same scenario as back here. So I added 1 more share again for the break of this daily candle. That's a pretty strong signal for the S&P 500, is when it comes down near that 50 MA. It generally doesn't chop around much. It'll reverse. But of course, anything can happen. And I knew that going in. I knew that, okay, we're at all-time highs. This thing can reverse at any time and be headed for a downtrend. But people have been saying that for the entire year, because this thing has been trading at all-time highs pretty much all year long. So no reason to change the plan based on fear or any, someone's guess or speculation about what the price could do. I just stuck to the plan and did the exact same thing again, added 1 single share. This time it was only a 25% increase because I had 4 shares now. So the price moved up from our second position area, 107.90 to 110.56. And the only reason I would add in that case is not just because of the signal that things might reverse again, but in the case where as soon as I add, I'm still in the profit. So I would never, ever add to a trade where now all of a sudden I'm losing the trade if I get stopped out on that first day. Because again, that's the worst case scenario, is that I get filled on this day and it stops me out on the same day. That would be the maximum loss on that additional share. So I have to make sure that when I add shares, that I'm not putting myself in a position where I'm going to lose the trade now all of a sudden. So that wasn't the case here. I was going to win the trade no matter what, even in the worst case scenario. So it made sense to add. Unfortunately, that that part of the trade did not work out. It came down and stopped us out today. And I even kept the 50 MA, sorry, I kept the stop loss on the previous day's 50 MA just to give it a little bit more room. And it ended up stopping me out actually on the penny, but then came down even lower. So it would have stopped me out, regardless basically of whether I had the 50 MA where it is today or where it was yesterday. So that's what happened there. Let's take a look at the spreadsheet now, and you can see the results. It was a little hard to record these trades because of the ads, but so I tried to kind of make it look like they're grouped together with these thicker black lines. So this is really one single trade, but with two ads. So this is the original trade, again, with just 3 single shares. The first day potential loss in the worst case scenario was 1080. And then as I added the additional shares, we were guaranteed to win the trades. And I kept track of like what would happen if I would just have the 3 shares, 4 shares, and then finally the 5 shares. So you can see that although, I would have made more money if I would have gotten stopped out today with just the original 3 shares. It was very close, and I think it was a good chance to practice adding to a winner. So, and if I would have just left that 4th share in there and not added the 5th share, we would have made more money there than with just the 3 shares. So it kind of gives you an idea how things work. So here's our P&L based off of just the original 3 shares, that added 1 share, and the second add. So this is the 5th share, was a loss of 416 just from that single share, not the trade overall. The trade overall was a win of 32.45. So doing pretty good so far on these swing trades with SPXL. We just started trading this ETF back in at the end of May, or May 20th, and we're about in the same place now on in September. So what is that? Let's see, May, June, July, August, September, 4 months in, and the reward, or I should say the return on investment, is approximately 16.5%, which is really good. My long-term goal with this is to just be, say, above the average return of the stock market, which is roughly 10%, maybe 12% on a good year. If I could be at or above that, then I'll keep swing trading. I prefer to swing trade than just dump a bunch of money at the beginning of the year in one of these ETFs and hope for the best, because I'd rather be in control and save myself from any big downturns or crashes in the market. So that's why I like to stop out at the 50 MA on the SPXL ETF. I'm not saying that's the way to swing trade in general. This is just the plan that I follow on SPXL. I do have this trading plan available for download on patreon.com/tradingarmor if you're interested. And just know that just because I'm making money with this plan doesn't necessarily mean that you will be too. But it's a pretty easy plan to follow, and SPXL is a pretty easy ETF to trade, even though it's leveraged. It just really tracks the SPY very well. So anyway, or S&P 500 very well, I should say. So let me know if you have any questions about these swing trades or about the plan or anything else. Hit the like button if you found this helpful. Subscribe if you haven't done so already. As always, go in every single trade, whether you're trading for the day or you're swing trading or you're investing long term. You should have a plan. You should have an entry, an exit, a profit target. All that kind of stuff should be decided before you take the trade. And you should also be aware of the best and worst case scenario and be willing to accept both outcomes, as I continue to add shares to this trade. So anyway, always take your stop losses on your profit target, and in the long run, you should be green. Take care.